Hey, good morning. This is Mayor Valensky with Driving Markets. I hope you're well. Okay, so since last week, remember last week was obviously New Year's Day. The markets were closed on Monday, and then effectively they started reopening up on Tuesday. So it started off with a bit of a quiet week on Tuesday, bit of a quiet day on Tuesday. On Tuesday, you had German inflation numbers, which came out a little bit lower than expected. And then on Wednesday, you also had French inflation came out a little bit lower than expected. So that overall was good indication for the market as to where it's going. Now, Wednesday evening, you had the FOMC minutes of the December meeting, and that actually shocked the market because the minutes stated quite clearly that they're not at the end of the interest rate cycle, okay? Now, what that means is follows. It means that it looks like the Fed is looking at interest rates rising even further in 2023. That sent equity markets down, sent the dollar up. Then on Thursday, there was the private sector employment number came out in the US, and that was stronger than anticipated. That also shunted markets downwards. But what happened on Friday changed everything around. On Friday was the non-farm payrolls, which effectively is the unemployment number in the US. Now, even though there were more jobs created, what was unusual for the first time in several months or some serious time, I don't know how long to check into it, was that the wage increases had not gone up as much as expected. So they were expecting a 0.4% increase in the hourly wage, and it came in at 0.3%. And the equity markets and financial markets took that as a real positive, and they just bought the market. And obviously, all indices and all shares went up, because what the traders have been looking for recently is they've been looking for any type of positive news to give them that little bit of a thrust, that little bit of a jump to get in there and buy the market. And on Friday, they got that with the non-farm payrolls, where the Dow was up over 700 points and the Nasdaq was up 260 points, which was huge. Okay. What's interesting though is that Bitcoin didn't go up at all. Bitcoin went up, I think, maybe $200. It's as if Bitcoin and the crypto sector have lost all of their volatility. They've lost all of their excitement. There's just no movement there. You're not even getting you are getting 1%, but you might get a 3 or 4% movement. You used to get 6, 7, 8% movement on a daily, when it came to cryptos, when it came to Bitcoin, especially Ethereum. But now you're getting absolutely nothing. You're getting really minimum movements on the crypto sector. So looking overall at the shares, obviously all went up. The Metas, the Amazons, the Googles, the Netflix, they all went up. Tesla went up also. Tesla's under pressure because of its lack of sales and also of its production line. Okay, so it's not getting the products out there, and we are looking at a recession in 2023. If I was going to look now into markets, say any rise in financial markets is an opportunity to sell into it, sell into the financial markets, because the rally is not really substantial enough or broad-based enough to say there's been a change in direction. Okay, so any rise in financial markets, look to sell into. The markets will go down this year again. They haven't really just started in 2022, but there will be a pretty deep recession, deeper maybe than 2008, but there could be a light recession, which is unlikely, but likely to be a deep recession, much deeper than the 2008 recession. Okay, if anyone remembers that. Now, so what you're going to have is you're going to have a 25 to 30% fall in equity prices in 2023. So any opportunity, any rises in equity markets, that's an opportunity as far as your trading is concerned to sell into it. One of the shares in the States which came out that is likely to go bankrupt is Bed, Bathrooms and Beyond. The code there, the symbol is BBBY. That dropped 30% on Thursday and dropped more on Friday. And they've already informed the investors and traders that potentially they could be going bankrupt because they've only got $200 million left of cash, and there's just not the sales out there for them to support their business. Okay, that's an example of what's going on. Salesforce is laying off 7,000 workers, so that's 10% of their 10% of their Salesforce, 10% of their workforce is being laid off at Salesforce, and there's going to be more unemployment in 2023 as layoffs increase and more companies begin to cut back in order to either save money or try and add profits to their bottom line by cutting costs. That's what's likely to happen in 2023. And that's more or less it. What we've got this week, by the way, coming up is you've got CPI numbers, Consumer Price Index, you've got inflation numbers, you've got the banks now, the reporting season, the banks are beginning to report. So you've got a lot of activity, a lot of indicators, and some guidance as to see where equity markets are going. If the corporate earnings are good, they can expect markets to jump up significantly. And obviously, if inflation is good in the States on the Consumer Price Index, then you're going to have obviously a further jump on equity prices. I'm expecting inflation to continue rising in 2023, and I'm expecting corporate earnings to be impacted by the recession that we're likely to go into in 2023. Okay, this is Meir Walensky with Driving Markets. Have a good day. Catch you soon.